All right. Here we go. Here we go. It's another day. Hopefully, another dollar. Oh man, the ADP report. The ADP report's always something else. Sometimes it's seen as noisy. Sometimes it's seen as the nothing burger before the real jobs report. But today, it's going to be seen as all we got before the Fed meeting. This right here, in my opinion, will be a major deciding component of the rate cut December 10th or not. Now, I do think we're going to get the rate cut December 10th. I think it's going to be a hawkish cut. And that's why I've been bullish up through, well, the day before the Fed meeting. But let's see. ADP report is expected by surveyors to come in at 10,000 jobs. Anything honestly positive? Good. Last one was 42. And as long as it's not more than 100K, that's probably okay. Oh, shit. It's negative 32. Okay. Well, that's not good. It literally just dropped. Okay, so prior was revised up by 5,000, so from positive 42,000 to 47,000. Negative 32. It's not good. Okay, we just guaranteed the December 10th rate cut. So let's just put it that way. D's 10 rate cut, that's in the bag. Now it's going to take us a moment here to get the actual deets of exactly what's in this, but negative 32 on ADP. Let's just put it this way: on ADP versus 10K expectation. D's rate cut is in the bag. So we pretty much guarantee that. Now, markets don't always react right away, but I would expect the first thing that we'll see is treasury yields come down once this actually gets sort of hit in markets. So I expect treasury yields to come down. I would expect mortgage companies maybe will respond positively to this in the sight that we'll see this rate cut, and with a negative 32, it might even set up for another rate cut, honestly, in January, because you could actually remove. There it is. Wait, right there it says negative 32,000, and here it says negative. Like, look at that. Here it says, oh yeah, here too. See, private employers shed 32, and here it says 31. So which one is it? Are they just picking numbers now? Job creation has been flat during the second half of 2025. Flat, ironically, is actually still okay because of the break-even employment rate. Negative is bad. Remember, this is what I said was not great. And gold's actually popping a little bit on this now at 42.20 now. But anyway, pay growth has been on a downward trend, although pay growth has still been positive. November hiring was particularly weak in manufacturing, professional business services, information, and construction. Now remember, we got those ISM manufacturing numbers that were telling us that new orders were basically trash. So that wasn't great. That could be a contribution to this. Of course, when new orders are trash, you're going to see a slowdown. Information is always interesting because there's, the AI aspect here. Hiring has been choppy as of late as employers weather cautious consumers and uncertain macro. And while November's slowdown was broad-based, it was led by a pullback amid small businesses. Wow, what a surprise. Just yesterday, remember the small business article we looked at? It was mom and pop stores going bankrupt. That was a Bloomberg piece, and it was talking about an increase in these Chapter 5 or V, Subchapter V rules on mom and pop bankruptcies. I'm going to go with 5 because we always use numbers on these. But anyway, this is kind of reminiscent of what we're seeing in this quote right here from the chief economist at ADP. Now, yeah, look at that. You still have the large employers here. The large employers are coming in and saying, hey, you know what, we're going to still hire. And I wouldn't be surprised if this is going to be West Coast. Let's find out. So location-wise, we'll actually see that in the underlying report. Okay, so like I said, D's rate cut now essentially in the bag. ADP jobs report, November 2025. If you're just now joining, we got a negative print here. It's not great, not terrible. Negative 32,000 versus the 10,000 expectation. Not great. Okay, so if I look at regions, yeah, look at it again, folks. I'm telling you, it's the liberal left side is still creating jobs. You gotta send your thank you cards to that West Coast. Though you did also get the East, North, Central, which is, I guess, part of the Midwest region. So Midwest, East, I don't know, what is that, like Illinois or something? I don't know. But whatever this is, maybe that's Chicago and maybe that's San Francisco, something like that, right? But anyway, okay, so small establishments shed 120,000 jobs. I feel like that's early, or that's where you're gonna see it first usually. So I always put my own sort of hat on, but my small business really cut G&A and jobs starting Q3 2024 and seriously in Q1 25. We refocused on growth, like R&D rather than G&A, and it's great. Like, I mean, it's been fantastic for the business. But the point is that rejiggering, we went through that, and I kind of theorized. So my theory is that small are most sensitive, so they start first. And I thought I was really early with this, and I recognized that, but I thought it was better to be early than too late, right? So then if you go, you could see medium, so 50 plus employees. 50 plus employees are still hiring. Oh, well, there are the queues. Hughes actually took like an extra couple minutes to react, huh? Look at that. Yeah, I mean, we were talking the number right here, and stocks were still moving up. And we're like, what? I mean, I get it to some extent because, you're guaranteeing your rate cut. But anyway, so if you have more than 50 employees, 50 or more employees, you're still hiring. You're hiring. I wonder what pay growth is for small businesses then. Do they show us? No, not necessarily. Okay. Year over year, pay for job stayers rose 4.4% for job stayers. Job changers was up 6.3, slowing from 6.7. Haha, 6.7 from the prior month. Okay. Small firms. Wow. Yep. There it is. There it is. Look, small firms are not paying more right now. Most sensitive. So you definitely see that maximum sensitivity here at those smaller businesses, which is really a backbone of America. Small business accounts for, I believe it's 48% of our workforce. I believe that's true. Let me see. Small business, 48% of workforce. I believe that's true. I'll do a quick fact check. If some, okay. Yeah, okay. It depends how you define it. See, here's the census business that say small businesses are nearly half of the workforce. And here's the Bureau of Labor Statistics that calls a small business 249 employees. That's not a small business, you freaking crackers. That's not the right word. The cracked up. These are cracked up numbers. That not supposed to be a racial cult thing. Anyway, it's too early for this crap. So like, who calls that a small business? Like, that's stupid. But anyway, so see, and then these people call it 43. So somewhere between 40 and 48%. That seems to be the number that's pretty typical here. Okay. Here we go. With jobs. For instance, small businesses that employ between 10 to 19 employees collectively at 500,000 jobs. Okay. Yeah, here we go. And this sort of, yeah, I mean, small businesses create more jobs. Yeah, but look at that. That goes all the way up to, they're counting up to 500. Yeah. Okay. So a little bit of a different definition there. So I will put a little line here. It's good to actually see that. So I'll put a line here, and we'll call that 43%. 43% of our workforce is uh, at 250 employees. There we go. That's per the Census Bureau. So now we have a citation for it. Okay, good. So then we have, let's see. Let's look at the comments here. So we lost the 32,000. Not great. Again, my thing was like what I said in my alpha report. Our alpha report strategy said anything positive is good, and really like you know negative 10K is like indistinguishable from zero or positive, right? Like that's a rounding error. But negative 32, that's not great. So independent measure, I think that's sort of an early. It's still an early warning sign of that. This economy really is slowing down, which really sucks because we don't really want it to slow down. I mean, let's be real. Everybody wants to see their income go up, stocks to keep going up. Like, come on, man. We want the party to keep going. ADP National Employment Report is an independent measure of the labor market based on anonymized data. Together in the jobs report and insights, blah, blah, blah. Hiring has been choppy as of late as employers weather cautious consumers and the macro environment, which is interesting because you still saw that increase of Black Friday, sales data. I mean, a 4% increase in Black Friday sales broadly post-inflation is really like a real 1.5% increase. So I know there's so much enthusiasm about like, oh, but Black Friday sales, but then as we saw yesterday, buy now pay later is skyrocketing as well. So that's always a little poopy doopy. So job creation has been flat during the second half. Pay growth has been on a downward trend. November hiring was particularly. Right, we saw that. Oh, it's too early for this crap. It's too early for bad news, man. Wake me up with some good news. Information, prof business services, leisure and hospitality. Look at this. Usually this one comes to the rescue. Didn't come to the rescue here. Mind you, these are going to be, ADP seasonally adjusted, right? It's got to be, because otherwise that'd be crazy. But let me check. ADP employment report seasonal adjustment. Let's just find out here. So the company uses a seasonal adjustment process. The seasonality is calculated at a weekly level. All right, yeah, all right. So it does include seasonality. Well, that's good. So seasonally adjusted. So no, I mean, you still had education and healthcare come in a little bit. All right, education and healthcare is usually your last cycle, usually late cycle, but specifically education and like government, I guess I should say. So we don't have a breakdown of that, but that's okay. Then. Yeah, we saw the regions. Okay, and then we did see which jobs were paying the most. The most pay was in financial activities, actually. Well, that's not a surprise with the stock market at highs. And then leisure and hospitality at 4.5. But interestingly, manufacturing better than construction in terms of pay. All right. Well, implications here again. You're going to have a, let's see here. You're going to have pretty much a guaranteed rate cut here, which is great. Let's see here. Oh, there's talk that Tesla shares gain after Trump administration plans to accelerate U.S. robotic development. Rhintech Robotics, Teradyne, Serve Robotics, all popping on this talk. Gotta love the directed investments from the Trump admin. Okay, but honestly, we're so far behind on China. It's a good thing. Okay, so treasury yields are sliding. Yeah, but not that much, honestly. I mean, this is for a negative 32,000 report, that is not that big of a drop. So we got a session low on the dollar. That's understandable because Treasury down. But only, I mean, you're still at 4.058 on the 10. If I go in now to the 10-2 spread, I get 58 over here. This is, yeah, I mean, this is still, you're still in shock territory. So not great. Okay. Yeah. Somebody's talking about the survey size. Well, yeah, I mean, look, if you've ever taken a statistics class, you know that you could actually get a solid, reasonable sample base out of the survey size of the ADPs. Yeah, I think for the U.S. base, they have about, what did they say, 26 million employees? Because they do a lot of payroll processing. And we have a labor force of about 156, somewhere around there, million. You can't survey everyone. How many phone calls have you gotten? It's the same thing with the Bureau of Labor Statistics, right? So it's all statistical slice. And as long as it's a properly random survey, it should be statistically significant. But yeah, I mean, of course, on a monthly basis, there's noise, but you have to remember this is coming after a pretty clear downtrend on this ADP jobs data. If you go, I mean, here we could see, let's see if we can show growth, change. Yeah, I wonder, I'm going to just zoom in on the right over here. Yeah, so you could see this flatlining over here, right? But I mean, really, where do we sit right now? Right now we sit at, let's see what it has. I don't know why that mouse doesn't even want to get into that corner over there. But anyway, I guess you could really see it's flat since July is the idea here. 134,561. There we go. 134,545. Yeah, so compared to July, we are now negative, which is wild because this helps you reduce some of the noise. Because again, like on a month-over-month basis, of course, in data sets, there's going to be some volatility. That's really understandable. But I think that's why these charts are quite entertaining. If I now go here and I look at, that's from here, right? So that would be July to here. We're going to be, what was that, about negative 15,000? I'll do the math again perfectly here. But since July, down about negative 15K. So that means zero. That means we're net negative for July, Aug, Sept, Oct, November. That's kind of wild to consider that. So when you look at it like that, I think then it's like, oh, I didn't really smooth that out. So let me look at the exact, it's 16,000 was the number. So we can see that here, 561 in July, and then 545 in November. So it's negative 16,000 since then. That's pretty remarkable. So it's not, as I mentioned for the alpha report, let me do this. Okay, as I mentioned with the alpha report, I suggested that anything positive is mostly decent. Because we believe that the break-even rate, which is essentially the rate at which the unemployment rate doesn't change, is probably close to zero. And that's not because we're saying that, zero is somehow good. Nobody's trying to brag that zero is good. It's just simply a way of adjusting for the fact that we have substantially fewer people moving into this economy due to the immigration changes. And that totally makes sense. It's reasonable. The Economist, like the actual paper, they estimate that the break-evens rate is somewhere around 20,000. Some say it's around 30,000. Jerome Powell seems to suggest it's around zero. Other people at the Fed seem to be between 0 and 20K. And typically, if we want to be bullish, we would say that, all right, well, like, I think we can all agree that the number is, if it's between 0 and 20, the break-even rate, because it's a moving target, we don't really know. If we can all agree it's between 0 and 20, then we can agree that anything negative is bad. And that's just sort of a simple way to look at it. So anything negative should drive rate cuts, and anything positive should broadly be okay. And of course, the more positive, the better. But negative 16 on ADP is going to remove some of these issues. So, or like this belief that everything is okay. This is not okay. Okay, let's put it that way. This is bad. Now, here, and now the numbers are coming in. And then we knew this. I mean, I said it within 5 seconds of the data coming out. The shock decline in ADP payrolls all but cements traders' outlook for an interest rate cut from the Federal Reserve next week, while the private data has yet to be corroborated by delayed government data. It adds evidence of a slowing labor market and is likely to sustain the bias for lowering borrowing costs in 2026. Now, can we go bullish off of this? Maybe, actually. That's the irony. Now, we'll make a whole strategy in the Alpha report, but let me just go briefly into this. This, ironically, reduces the hawk level we'll get from Powell, D10, which is, ironically, bullish, more rate cuts, and removes a hawkish catalyst of a hawkish cut, right? I mean, maybe it doesn't necessarily fully remove it. It certainly reduces the odds of a hawkish cut, D10. So that's kind of neat. That's something to consider, right? Could that be bullish for risk assets? Absolutely. So again, if you're just joining, consider that. We were expecting 10,000 jobs. We got negative 32,000. Now, in fairness, we added 5 to the prior. Okay, still, that'd be negative 27 over here. That's a bad report. Now, later we'll get the S&P Global Services PMIs and the ISM services. Those will be out at 6:45 and 7 California time. And those will give us a little bit of an idea as well on hiring, because we did see that manufacturing was a drag on employment in the ADP report. And we saw that in the PMI and S&P manufacturing reads yesterday. Or Monday morning. I can't remember now whether it was yesterday morning or Monday. But either way, small businesses are usually an early cycle cutter. And I want to make a clear point here. If you work at a smaller business under 250 employees, think about this. You should be asking yourself, has the business already gone through the cuts or not, right? Has the biz gone through the cuts yet? That would be the question that I had. So if I worked at a company with less than 250 employees, I'd be saying, has the business gone through cuts already? If they've already gone through cuts, great. Maybe that means you're surviving, right? If they haven't gone through cuts yet, it actually suggests you could be on the chopping block. Like, it's just a matter of time for that cycle to kind of catch up to your business. And so if the cuts haven't happened yet, I think it reiterates pay down margin, get out of debt, or at least reduce your debt and save for a rainy day. Like, now's that time to increase money for that rainy day fund, because this just reiterates that the trend is not our friend for the labor market, and that we should be more cautious about our own outlook. You do not want to go personally bankrupt because of a stupid recession, right? Recessions are supposed to be the time of opportunity where you're buying stocks for a big freaking discount, right? You can't do that if you get fired. So, and then you try to go get a job, then you start at the bottom rungs. That sucks. So your seniority's gone. And then you're usually in a recession, you're taking less pay because you're like, I'll just take anything at this point. So not great. And that's why I say I think that small business firing like this is bad, dude. 120,000 on small establishments. That's early bad cycle. Like I would argue, and I don't know this with certainty. Maybe we can run the numbers on it, but I would argue that small business firing leads large business firing because small businesses are always going to be less resilient. They're always going to be a riskier play. I don't know if I can say for small business hiring. No guarantees we'll be able to find it. Hiring with small employees. Okay. The data goes back to 2010. Wow. Damn. All right. Well, I guess we'll know in the next recession. I guess we'll know looking backwards in the next recession. Well, that's a bummer. Yeah, because that would be an interesting belief that I think we can corroborate. Obviously, I always try to give you my insights in terms of like are these fact based or opinion based. I think that's valuable for you. So anyway, yeah, not great report. I will argue this does take the hawkishness out of Powell a bit for D's 10, so it's ironically bullish. We're going to go hop over to the course member live stream. We're going to make a game plan for this for trading. So, yeah, if you're part of that, we'll see you over there. And to the person here asking, so does the rate cut happen? Well, you must have joined late, but it's okay. Expect that, yes, we're pretty much guaranteed getting a rate cut December 10th. And now you might actually be setting up for a January cut as well. And then somebody else here says, it's hard to trust the numbers since they're coming off the Trump shutdown. The data is suspect. So unfortunately, Matt, this has nothing to do with Trump. These are private payrolls. So this is a private company that is doing these. This is not the government data. And remember, that's why also that we are looking at this sort of moving average over time. And we can see that employment growth since July has been negative 16,000. That's not good. And so that smooths out some of the volatility. Something to keep in mind. Somebody says, could you turn on closed captions? I'll turn on closed captions in the future. I thought I did this morning. I clearly screwed that up. So I'll do it on the next live stream. Anyway, folks, heading on in to the Course Member Live. We'll be there in about 5 minutes. Thank you so much for being here, folks. There's the news.